The clock is ticking on a limited time offer to get Bitcoin on the cheap. Whether it turns out to be a bargain or a bad deal depends on the actions of the SEC. Hi, everyone. I'm Rosemary Miller here with Stephen Ehrlich, the director of Forbes Digital Assets, here to tell us more about it. Thank you so much for joining us today, Steve.
Thank you, Rosemary.
So, Steve, can you tell us what is Grayscale Bitcoin Trust?
So, Grayscale Bitcoin Trust is the world's largest digital asset investment vehicle. Right now, it houses about $16 billion worth of Bitcoin. It launched years ago as an easy way for regulated institutions and wealthy individuals to get exposure to the Bitcoin price without actually having to go through the hassle of buying and custodying the asset themselves. It's become a bit of an albatross, though, around the neck of Grayscale, which is the world's largest digital asset manager, because for years the shares traded at a significant premium above the net asset value, the NAV of the Bitcoin that underlies each asset. When eventually it gets turned over to the public markets. But over the last couple of years, it's reversed into a relatively sizable discount, bottoming out at about 50%, and right now it's trading at about 17% under NAV on OTC markets, and that's led to a lot of consternation among investors because the nature of the construct of GBTC as a closed-end trust means that there's no redemption mechanism where holders of these shares could theoretically go back to Grayscale, give them the shares, and ask for the Bitcoin back. That can happen in more traditional investment vehicles like an exchange-traded fund, an ETF, which is what Grayscale is trying to become. But right now, GBTC is kind of like Hotel California. You can check in, but you cannot check out.
So, Steve, why could this trust be so profitable for investors participating in it?
So, in the earlier days of the trust, it was extremely profitable and it was virtually a risk-free trade because rich investors, institutions, wealthy individuals could go to Grayscale, create these shares, and then after holding them for a period of 6 to 12 months, could sell them to retail markets at up to a 30% profit. And they could just kind of rinse and repeat that cycle over and over again. However, that trade kind of reversed itself back in 2021 when the premium switched to a discount. The main catalyst for this, I believe, is the creation of some spot Bitcoin ETFs in Canada. And there's not necessarily a direct causal link there, but ETFs, as we talked about a minute ago, are much more, I guess, investor friendly because they allow redemptions. So what that means is that if there's a big discount or a premium, arbitrageurs could come in and say, hey, look, there's a big discount, buy the shares and exchange them for the NAV. And the reverse could also be true if there's a premium. It's the equivalent of handing the U.S. Treasury 83 cents and getting a crisp dollar bill back. And in today's sort of investment marketplace, that's like anything else kind of seems anachronistic. So this trade, when it reversed itself, it was almost kind of named the widowmaker in crypto circles because a lot of companies actually went bankrupt when the GBTC trade reversed itself. And now we're in this interesting period where Grayscale is trying to convert GBTC into an ETF along with dozens of other ETF applications out there, trying to become the first to offer a spot ETF so that they can enable these redemptions. No GBT shares have been created for years because why would you create something that trades at a discount? And they're trying to do this as a way to sort of modernize their product, catch up with the rest of the world, and finally offer redemptions to investors that are kind of locked into this unprofitable trade. Yeah.
So let's switch gears a little bit and talk about the lawsuit between Grayscale and the SEC. On what grounds did Grayscale sue the regulators?
So Grayscale was not one of the first companies to try to create a spot Bitcoin ETF, or in this case, because they already had an existing product, convert GBTC into a spot ETF. They were kind of waiting until they felt the SEC was ready to sort of take that step. And they eventually, in 2021, they filed to convert GBTC into a spot ETF. And then in 2022, last year, that application was rejected for the same reasons that the SEC has rejected all of the 30 plus spot Bitcoin ETFs that have ever come before it. Basically, that the regulator is not comfortable that Grayscale and sort of the marketplaces that would actually list the shares would be able to protect investors from fraud and manipulation in the underlying spot market. Grayscale called foul here. They called hypocrisy here because the SEC has allowed Bitcoin futures ETFs to trade. And the argument is that Bitcoin futures, these are essentially contracts where two parties agree to sell a certain amount of Bitcoin to each other for a certain price at a predetermined point in time, usually kind of like, at least in the US, they're monthly contracts. And what the Grayscale was saying, there's some more legal minutiae here that I won't get into, but basically what they're saying is that if the SEC is going to allow a futures ETF to trade, there is no reason why a spot ETF should not be allowed to trade as well, because just by the very definition of futures markets, their price, their performance, their legitimacy is based on the underlying spot market. And basically, what Grayscale was saying is that, at least according to the Administrative Procedures Act, the SEC and any other regulator is required to treat like products alike under the law, and the SEC was not doing that. And Grayscale, and this is, I believe, very much an existential question for Grayscale. Their investors, many of which are angry. Some of them have sued for documents, have sued for data, have filed activist letters to try to force Grayscale to create redemptions before becoming an ETF. Grayscale, I think, felt some pressure, and they also, I think, felt that they were in the right, that they would sue the SEC in court, claiming that the SEC was not properly following the law with regards to their application.
Mm-hmm. So the Grayscale did have a slight victory over the SEC. What does that mean for their ETF?
Right. So they had and forgive me, Rosemary, but I think they had a very large victory over the SEC. I think it was August 29th, so about 2 weeks ago, a three-judge panel from the D.C. Circuit Court of Appeals sided with Grayscale, vacated the SEC's rejection of the conversion of GBTC into an ETF. And it was honestly very terse language, and it was a systematic takedown of basically all the justifications that the SEC has ever used to reject GBTC's application and plenty of others. And I mean, it was a very I'm not sure what the right word is, but it was they did not mince words with regards to what the SEC was doing. So now we're in this kind of weird holding pattern where this is kind of an unprecedented situation. Typically, the SEC has 240 days to decide whether or not to allow an ETF application to list. We are more than 3 times past that, just going back to the original date of Grayscale's ETF application. But obviously, there are some mitigating factors. I mean, for instance, the lawsuit, and then obviously the court ruling throwing out the original rejection. So we're not quite sure what's going to happen next. Grayscale has sent a letter to the SEC asking them to basically saying that the rejection has been vacated, kind of work as expeditiously as possible to let this list right away. But the SEC has 45 days from the judgment to appeal, so that would put them into the middle of October. And it's really uncertain as to whether or not Grayscale may have to reapply, if the application could still stand. The SEC, this doesn't mean the SEC has to approve a Grayscale Bitcoin ETF. They could reject it for different reasons or for different explanations under the same reason. So there's a lot of uncertainty here. And then adding further complicating factors to all this is that there are several other Bitcoin ETF applications pending right now from the likes of BlackRock and Invesco. I think Franklin Templeton actually just today filed an application, Fidelity, and they all want to list a spot Bitcoin ETF first, because there's a tremendous first mover advantage in this particular market. So Grayscale wants to get this done as quickly as possible, and they want to make sure that they stay on the same timeline as everybody else because they don't want to fall behind.
Well, while there's a first mover advantage, what does this timing actually mean for the investors rather than just the companies?
That's a good question. Timing is very important here. Right now, GBTC is trading at about a 17% discount. This is kind of where it's remained since the court ruling came out in late August. Before then, it was around 29%, and as we had said before, it had fallen to as big as or widened to as much as 49%. Uh, a good question to ask is if the court ruling in Grayscale's favor was so favorable, why is the discount still 17%? Why hasn't it shrunk further if it seems to be a fait accompli that GBTC is going to be allowed to convert into an ETF and thus enable redemptions, and arbitrageurs would eventually trade away the discount? And that kind of goes to a few different factors that we learned while researching the story. It comes down to the fact that, again, we don't know what the SEC is going to do. They could still reject GBTC and other spot ETFs for similar reasons with different explanations for different reasons. And timing, it's hard to know exactly. It really kind of comes down to the time value of money. And while, yes, it might seem like on face value that it's a quick, easy way to make 17%, if you don't necessarily know if you're going to make that 17% a week from now, or maybe not until March, or potentially later if the SEC requires Grayscale to refile, all of a sudden that 70% seems a little bit less lucrative. And for all those different reasons, all of that uncertainty, that discount still remains. So on face value, it looks like it could be a really good deal, but it really just comes down to like everyone's individual perception of what the SEC is going to do and when it's going to do it.
So, what coming developments can we expect in the near future?
So I think the next big one is going to be, what is the SEC going to do? Are they going to appeal this decision to the full DC Circuit Court? It seems it's hard to know for sure. The SEC has shown a willingness to appeal court rulings with relation to crypto that they don't agree with. I mean, for instance, another sort of important ruling that came out, and I believe this was in June, was in relation to the SEC's lawsuit against Ripple, a company that is kind of behind one of the larger tokens out there called XRP, which is sort of used to help process international payments. The SEC sued Ripple in December 2020, alleging that the company engaged in what was tantamount to a $1.3 billion unregistered securities offering. The case had taken years to sort of adjudicate itself, but in a ruling that came out in June, the judge said that while certain sales to institutional investors were unregistered securities unregistered securities offerings, programmatic sales to retail investors through exchanges were not. So the SEC has shown an interest in defending itself in court, and they're not necessarily going to go quietly. It remains to be seen what they are going to do in this particular case, but just given the consistency of the rejections over these 30 different ETF applications that have come before it, going all the way back to the first one in 2013, I would not be surprised if they do try to appeal. But I think the one thing that I do want to point out is that the three judges panel that heard this case, they were bipartisan. They were appointed by both Biden and Trump. So it's not like I think it'll be hard for the SEC to claim some sort of bias in this judgment, because the panel was made up of judges appointed by presidents of both major political parties.
Okay. Well, thank you so much for joining me today, Steve.
Great. Thanks, Rosemary.